Hello YouTube, step index on a 4-hour time frame. Now in the first video for the letters of a synthetic indices trader, these are just my findings and I am just going to relay them in a type of a lesson video, and I hope you guys enjoy and find this insightful. So I have to talk about this one first. The new week inefficiency has been invalidated. Yes, I got this trade wrong. However, if I was trading that new week fair value gap, I would still make money even though the market reversed against my bias. It went lower, back down into the 20th October's opening price. This right here is the opening price for the 20th. Okay, so I speak about this as a recurring phenomenon for each month. The 20th of each month will always be some kind of a retracement back inside of the range. Whatever the range has been, it's gonna reverse and go opposite in a parabolic manner. Okay, sometimes it has no retracements at all. It just goes one-sidedness. All right, it's parabolic to the upside or to the downside if you're looking at it in a bearish stance. Right. So I have something for you. Even though I was, in a wrong side of the marketplace, yes, we drew lower. Where did we go? Below the 20th opening price. You need to note this opening price in your chart. So since we are talking about a consolidation market, wouldn't it make sense for price action to go all the way down into the 4-hour bullish order block? By the way, this last down candlestick is anchored to time. This is the 17th of October, which is the mid-month low of October. All right, it sweeps that liquidity pool and then it starts going higher. I spoke about this as a market structure shift. Other traders call this a change in a state of delivery, because remember the price action was going downwards. So what is the delivery of this market? It is bearish. It is making lower highs and lower lows. This is a lower low, and this one as well is a lower low. Another lower low here, another lower low. But here we failed to make a lower low. So what did we do? We changed the state of the delivery. We are no longer making lower lows. We are now printing higher highs. So this is the market structure shift that I spoke about in the commentary for the letters of a synthetic indices trader. Right? This is your market structure shift. And as I said, it is linked to time. This is the mid-month low. Step index says these kind of things, the algorithmic price signatures. It tells you with its time. Like, for instance, the mid-month low of October. If you scroll back to September's commentary or August commentary, you look at the mid-month high or low, you're going to find a significant turning point, right? And you couple that with a consolidation market, you're at a support down here. Here is the 20th. We know that it tends to do what? To spool. It tends to move quickly, and it does so. Okay? So us coming back into price action after we've had this rally to the upside. My thinking, honestly, was that we've printed the relative equal high of Thursday's weekend price action very close to this one. So these are suspect highs. Okay, they are suspect highs, good people. When I see that the month end high, the 23rd of October, it is close to the initial high of October. This is the highest high of October's opening price. It is close to this month end. Whenever I see these type of highs nested together, I see them as suspect. Okay, what are they trying to paint above these highs? What's the storyline with these relative equal highs? Well, when price was returning back into the new week fair value gap, I spoke about the new week fair value gap as a means of a support to go higher and attack the relative equal highs up in here. But see, this trading idea was short-lived because price went lower. I also spoke about a scalper's market, right? Since we are in a consolidation, like from the higher time frame, you can clearly see that these are 4-hour candlesticks and they are large, but they are trading inside of a range. Price is being held in a consolidation. It's in a choke hold. So what do we do when price is consolidating like this? We look for specific algorithmic price signatures. Okay, the first signature I have already given you in terms of the timing aspect. This is a month end high of October. It is the Thursday's last weekend highs. It is noted, or it is close to the 7th of October high. The beginning or the initial high of October is close to this one. These are different times where price will print relative equal highs like these. This is an algorithmic price signature. It tells you where the liquidity is. You just have to be positioned at the right time to anticipate these highs getting taken out. I had my first attempt during the 26th of October because I was seeing that price action was coming down into the new week inefficiency. And I thought that we're going to continue from here and attack the relative equal highs. And I was proven wrong. So what happened here? This is the Sunday's opening price. It's on the 26th, but today it is the 27th, which is a Monday. So what did we leave? What did we leave up here? It's time. It is Sunday. Sunday's opening price. We moved away from it. Okay, so we're gonna note that and say these are Sunday's opening highs. Okay, and these Sunday's opening highs are close to this particular high, right? This is the Friday's London session high. Good people. So we are close to the Friday's price action that was going lower. We printed these relative equal highs. The new trading week high has printed this high close to the Friday's London session. Okay, this London session open, yes, that's the one right here. This is the London session highs. Okay, so price coming back down into the new week fair value gap can be an idea to go up into the buy side liquidity. But sometimes the criterias for that happening are slim, just like yesterday's price action was petered out with today's price action going lower. So what is this here? This is a fair value gap high and a fair value gap low. Well, man, I think that the fair value gap is being drawn like this. Yeah, I see that. But what if the fair value gap has a volume imbalance? We include that in our analysis. Okay, so this is the new week trading inefficiency. Remember that on the 26th was a Sunday's opening price. Yes, we took some long positions going into the upside, utilizing the new week fair value gap as a support to go higher right? But then price action petered out our long positions. If you were a scalper, you could have done well with this price action. I believe it moved like 25 points. Okay, that is a lot of money here. 25 points is a lot of money. I usually target like 50. 50 was somewhere up there, but this did not get played out. This one did not play out as well. So here is the new week inefficiency. It is a large inefficiency, as we can see, and it is also dropping down into the 20th October's opening price. This opening price, yep, it is super sensitive. Okay, and we are returning back to the bullish order block on the 4-hour time frame. So we are returning back to inefficiencies as well, revisiting those inefficiencies, making sure that orders are collected down here. We would be using order blocks as a means of entering and attempting to attack the buy-side liquidity pools. Why is the order block effective in this case? Because we are seeing that the marketplace is in a consolidation. So order blocks are very essential in a market that is going back and forth. So in the first video, I mentioned that if you're going to use a fair value gap in this market condition, you're going to be wrong more times than right. Okay, you're going to be wrong a lot of times. So this is one instance of me breaking the rules a little bit just to teach you this lesson that you have to use the bullish order blocks. Okay, for this market structure, you have to use bullish order blocks, match the PD array with a suitable market condition. So fair value gaps did not work, but other blocks down here, they're doing a great job. All right, so we are having this inefficiency here. That is the main topic of today. This inefficiency. It is large, good people. So what do we do with an inefficiency that is large? What do? We grade it. So I'm going to grab my grader. I'm going to take the Fibonacci tool, place it right here. And we have our price gradings here. We have the 25% quadrant. This is the lower half, and this is the upper half. Okay, so since we are going to support on the 20th October's opening price and this fair value gap and this bullish order block, there's a lot of factors down here, and I'm going to explain it even further on the daily time frame. So we're going to talk about ranges just a little bit, referencing the daily time frame. However, let's continue with the storyline here as to what is going on. So this is the new week inefficiency, and I just graded the inefficiency. These key levels, the 25%, 50%, and 75%, they can be used as support and resistance type of key levels. These are specific key levels, as we can clearly see, right? So what are we going to do with these key levels? As soon as we trade above them, we want to see price action return and treat them as a support. That is clear. Support is going to take place here because we are no longer resisting. We are moving away from the mid-month. Okay, we are moving away from the mid-month. The inefficiencies that we find on the left side, they are going to act as support. Bullish order block in here, we support it down here. So each key level, we want to treat that as a support as we go above them. Okay, and this is where we are going. The Sunday's opening price, the first trading week high, is nested with this buy-side liquidity pool. Can we reach up in here? Of course, right? We can do that. But the main target The main target is these guys up here. So we're gonna visit this new week inefficiency. Let's put it aside a little bit. We will talk about it as soon as we are trading at the upper quadrant. Okay, the upper quadrant, pairing it with the new week fair value gap, it would be a good idea to go up and attack the Sunday's opening price. We want to see price action getting above these relative equal highs and these ones as well. So this is algorithmic price signature number 1 and this is the number 2. So this is based on the daily time frame, but this one is based on the 4-hour time frame. So let's hop into the daily time frame so that I can show you the main trading idea for this trade. Okay, so this is what it looks like on the daily time frame. Remember on the 20th we had this expansion to the upside, printing relative equal highs, and then we drop lower all the way down to fill in all of these up candlesticks, meaning that if you take a paintbrush, okay, and supposedly you're painting a wall, you have a paint, you want your wall to be a specific color, and you run the paint one directional up, well, there's going to be pores of pockets that are missing with the delivery of the paint. So what does price action do? You need to roll the paint down to fill in those pockets of price action, if you know what I'm feeling, right? So we return back into those pockets and we fill in the pocket, really. We fill in where we had begun painting our favorite color into our wall. So here is the 20th of October. This is the paint. You need to note the opening price. We go up and up and up and up. There is a pore of pocket here. There is a pocket of price action here, which I spoke about with the Monday's price action. I was talking about an inefficiency, which is the new week inefficiency. We've drawn that on the 4-hour time frame, as we can clearly see how we could have used this as an idea. As I said, the idea is not wrong. Trust me, on some days it's really working. Okay, it really works. Just that for this particular trading week, as we can clearly see, price is in a consolidation. So what I did wrong was utilizing the inefficiency of the new trading week instead of utilizing the bullish order block itself. Okay, so that was the mistake that you need to watch out for. All right, so I have given you guys the trading technical tools inside of a consolidation market. Hopefully we get to the buy side liquidity up in there. So I gave you the trading coordinates. If you want to watch the market or observe it, you know which key levels to watch out for. All right, so hopefully you enjoy this video. Hope to see you guys on the next one.